morning. Welcome. It is March 13th, half an hour before we're scheduled to open the market. Today's pre-market video might be on the shorter side because we're not expecting a whole lot of movement or action this morning. So we said yesterday that, well, actually yesterday we had a reasonably large movement in the markets. We had the CPI report and we got an action off of it. And today we after a big move, we tend to pause. But not only that, we have the PPI coming out tomorrow, and the tendency is to go flat or move sideways before a major report like that. So today is very likely going to look very similar to Monday, and we're not going to expect a whole lot of movement. So we're not going to be surprised if we're kind of listless, we trade within a small range, or our futures might not be large. The movement in our futures might be as large as, for example, yesterday. So let's go ahead and take a look and see what that overall market looks like. And for the most part, very muted. The S&P 500 is very, very, very flat. The NASDAQ is kind of significant. We've got about 0.3. We're basically right on the edge of random and not random. So it's hard to draw a conclusion just for NASDAQ, but obviously the NASDAQ is struggling a lot more than anything else. The Dow is very flat as well. So we've got the attention inside of the NASDAQ. What that tells me is that the bond market is probably reacting to the CPI report finally. Yesterday, we didn't get too much of a move. It did come down, but we're probably coming down even further because of that CPI report. And that's going to make it difficult for NASDAQ. It's going to drag on the NASDAQ a little bit. If we get a similar movement off of the PPI report, then what we can expect is that all the major indices will move upward. And then once again, if the bond market starts to come down, it'll drag on the NASDAQ again. So let's take a look at how we're looking pre-market. I don't even know which one. There we go. So very, very flat. You can see we closed over here. It was very flat overnight. It was flat this morning, maybe tiny, tiny bit down. So no real bias in this market. It looks like we are heading towards the VWAP into the open. So hard to say in either way, in any direction, but that 518 level is going to be important if we're going to move upwards. So we may drift towards that 518 today because we are positively biased, or we are bullishly biased inside of this market. So if we're going to look very bullish today, very bullish, quote unquote, very bullish might look like we close right around 518. Or of course, if we go above 518, that's going to be even more bullish. It would be somewhat surprising for that to happen immediately before the PPI report. If we come down to the downside, then we would say we wouldn't have too much optimism if we closed near this 515, 514, 75 level. And of course, if we go below that down to 512, then that would be very bearish. We'd start to get very pessimistic because even with the PPI really strong, it would be tough for us to recover from that kind of a drop in a single day. So for the most part, I'm going to expect it to trade between 515 and 518 today. And depending on where we close, that'll be, we'll lean either slightly bullish or slightly bearish. And if we look at the overall S&P, let's look at the dollar real fast. I haven't done that in the last couple of days. So we're drifting higher, but not that much. It's been a pretty weak movement upwards, and we are still bound by this downward trend right here. Look at TLT. TLT gapped down yesterday after that CPI report right into that MA200. And this morning, it looks like it's going to open below that MA200. A lot of these other shorter term moving averages aren't that meaningful on the bond market, but a 200 is still important. So that's going to be an important psychological point for bond traders. And we could really see this move lower. If we close lower today, TLT short looks pretty good. If we can close below that MA200, we're probably going all the way back down to the bottom of this channel, or at the very least to this horizontal line. So a short-term TLT short looks like it could be a good idea. That would be a potential to look at in the aftermarket, but I won't be here live for the aftermarket, so it might be something that we look at tomorrow morning. So if we look at the SPY, you can see that looks like we broke above this box right here. If we trade sideways or slightly higher today, then we'll be comfortably out of that box. Otherwise, we're pulling back in. But if we just pull back to that MA8, EMA8, then that EMA8 is getting very close to the top of that box anyways. So we won't get too excited. So we're not really going to expect to really break below that EMA8 today because we're expecting that muted range. And if we look at that EMA8 level, that's 511.82, which is very close to the 512, excuse me, 512 level that we were just talking about. QQQ, nice bounce off of that EMA20. We touched it yesterday, the day before yesterday, and we got a comfortable bounce and confirmation bar yesterday. So even with that downward movement today, you can tell that on a daily scale, it's not that much. At 0.33, yes, it is on the verge of non-random, but it's really not that much right here. It's not even a fifth, or looks like maybe even eighth of the day's range. So this could comfortably drift higher, and what we want to see is that to challenge the highs in the recent days. So 2 days ago, 3 days ago, a week ago, we want to see that at least some drift upwards today for us to continue to be somewhat bullish on the QQQ. And if we look at Dow Jones, nice bounce off of the EMA20 right there. And Dow Jones, if the QQQ is going to go down, Dow Jones, we would expect to start to get a little bit more attention. So a little bit of flight to safety, money entering the blue chip stocks, but we've really just been trading sideways. This is 2-3 weeks of sideways movement, which is consolidation. Consolidation at the top right here after such a large move. The other day we identified it as about 21%. It's going to be difficult. We could have another leg upwards. It could be like this consolidation and then move upwards. The difference now being that this MA50 is much closer to our consolidation level. Over here, it was very far away. It could still rise significantly while this consolidated, but now it only has a little bit of room to rise. So it's going to be a lot more difficult for us to move upwards because of that MA50 getting close, but also because of the distance that we've already traveled. So this consolidation that we're going through right now is not quite the same as this consolidation right here. There is a significant difference. We could still continue to move upwards after this consolidation, but it's going to be more and more difficult for us to continue to move upwards. So we wouldn't be too surprised if this was it, if this consolidation actually led to a capitulation and then a downward movement. IWM, small cap stocks, move back down into the very top of this pink line range right here, the sideways range. Today's going to be pretty important, but especially tomorrow. to see whether or not we bounce off of this line or if we continue to move down into this range. If we bounce off of this line, then we would have a false breakout, a second breakout and retest, and then a movement upward. That is a pretty strong indication that we could be moving upwards. What we would then want to look for is a confirmation bar, or at least two bars where the low is completely above that line as well. So we did get two bars where that low is completely above that line over here, but we fell right back in. So what we really want to see is a confirmation bar like this one, but then the second bar also a green bar where the low is completely above this line. That will be pretty even stronger confirmation that we're moving upwards. And of course, the more bars we get above that line or sloping upwards, then the more confirmation that we get. And by the time we get two or three, we'll be very comfortable in saying, hey, we should really start paying attention to these small cap stocks and potentially even going into a longer term trade like a 1% extrinsic value on the Russell 2000 itself, or maybe a leveraged fund like TNA. So we'll want to watch IWM very carefully over the next couple of days. And let's take a quick look at our a couple indicators of momentum. So the 90-day high, see if that's correct, 303, 90-day low, 10. So this 90-day low hasn't really been moving at all. If I go backwards, 7, 7, 10, 15, 20, 20, 10, 15. So there's not a lot of stocks making 90-day lows over the last couple of weeks. This 90-day high has been fluctuating quite a bit, though. You can see that. Let me just go back equivalent number of days, but we can see 337, then down to 150, 350, 472, 180, 180, 303. So we have a pattern where we go up, we hit roughly 400, and then we start to come back down, and then we'll start to creep back up. So what happened most recently is we hit that 180 level for a couple days, and now we're creeping back up. If we see this starting to hit 400 again, then what would have happened in the S&P 500 is that we would have made another high or another all-time high, and then we'll expect it to pull back. That pullback could just be down to the EMA 8 like it was last time, or it could be a pullback to the EMA 20 like it was over here. But in this particular environment, that momentum indicator of simply how many are making 90-day highs and 90-day lows has been a very, very accurate short-term indicator, like day-by-day indicator. So we want to watch this carefully. Today, if we have a bullish day, we'll probably creep up. And then tomorrow, after PPI, that is strongly bullish, we'll most likely be very comfortably above 400, maybe around 500. And then we'll expect another positive market and maybe pull back into that EMA 8 or EMA 20. We want to continue to be aware that there are a lot of forces right now for us to watch and anticipate that we'll get that 5 to 10% correction. But for now, we're just going to look for those signs of the baby pullbacks, the EMA 8, EMA 20. And if we do challenge the EMA 20, then we'll start looking for the larger pullback, because we're really not expecting gap downs, huge gap downs. We might gap down to EMA 20 or just below it, but we're not going to expect from this height right here where we are to gap all the way down to the MA 50 or below that. That would take something very unexpected and newsworthy. So something like COVID for us to get that type of gap. And we're not really in that environment. It's been very relatively low volatility and predictable. If we look at the VIX and see that we've been drifting in this range right here, we haven't had a huge spike in VIX in quite some time. So we're in a low volatility environment, and it's just starting to creep up a little bit. There is a little bit of a trend line over here where that volatility is increasing, and that is a reflection of we're getting a little high. We've moved quite a bit. We've moved about 25% from this low right here. So naturally, the market makers are seeing the same thing that we're seeing, except they have a better view. They know exactly what their inventory levels are. So their volatility is just very slowly creeping upwards. And we're just going to watch for when that volatility spikes. And then that will be another indicator that the market makers will expect a larger than usual movement, which could be a capitulation to the upwards or a pullback, the beginning of a pullback. Either way, it's an indicator that we'll start to move downwards, and it would be an early indicator that we might be getting that 5 to 10% pullback. So today, it's mostly sit on the sidelines, wait and see type of day, because we're probably not going to get a whole lot of market action. And then we'll see how that PPI report comes out tomorrow. There's a couple other reports, I think retail sales and jobless claims. Jobless claims, PPI, retail sales. So retail sales will be important. Jobless claims haven't been significant to the markets for maybe 1 or 2 years now, but eventually it'll become relevant again. But retail sales will be important, PPI will be important. So tomorrow's a big day with 2 big reports on the same day. Then it's even more likely that we'll get a muted day today. And then we'll see that pent-up volatility pent-up market action get released in and a larger range, some volatility tomorrow. So today, for the most part, we'll be sitting and watching on the sidelines. Okay, so just a reminder, this afternoon, I won't be here live. If I have time, I will record a video for the aftermarket session, but otherwise we'll just expect to see you tomorrow morning. Have a great day, and I will see you.